Welcome to Geojit Spotlight. At present, investors are confused and worried as the markets are extremely volatile. Many factors are affecting the market. In this scenario, what should mutual fund investors do? We have with us Jeevan Kumar, Head of Investment Advisory Department of Geojit, who will share his expert views. Post-COVID, the market was giving lot of hope for the investors, but of late, the market is losing its charm. What's actually happening in the market?
After the COVID episode, market was in the phase of a revival. So in October 2021, Sensex had touched a record high of 62,000. After which, especially in February 22, when Russia-Ukraine war started, market has started falling gradually. In between, there are a lot of other factors also impacted on the flow of market, like high inflation, rupees weakness against dollar, FIS outflow, then US Fed rate hike. So these all are the factors actually impacted adversely in the market.
You said the Sensex has lost 11,000 points during the last 8 months. How is this impacting the mutual fund industry?
Actually, during the last 8 months' time, overall the market has fallen by 15%. If you ask me the category-wise, drop across all the major categories, starting from large cap to mid, small, larger, mid, flexi, and all, there was a fall between 11% to 15%. If we check the total AUM size of Indian mutual fund industry, it was 37.33 lakhs crores in 2021 October when the market touched 62,000. And if you take the figure of May, it has come down. This is happening for the first time in the industry. Because over a period of time, mutual funds AUM was going up, but during the last 6 months, we could see some sort of drop in the AUM.
It's very clear that the market has been eroded heavily since October 2021. So what kind of a strategy should an investor take at this point in time?
This is not for the first time the market is falling. We have seen the market fall in the past also. In 2008, when the global market crash happened, Indian market also crashed like anything. If you look at 2015 last and 2016 beginning, there was a heavy fall in the market, followed by the news of Indian banks NPA. During that time, crude oil price also went down, towards a historical low. So very recently, when the COVID pandemic started, Indian market has crashed in a very big way. From a level of 42,000, Sensex crashed to 26,000. So if we check, there is a unique character for equity investment. In equity investment, there are big chances for losing for a short-term investor, whereas a long-term investors have made money always in the market. So the best strategy is to sustain in the market, identify best schemes in the industry with the help of some experts, and you set an objective for your investment. You keep your investment until you meet the objective. So that is the sole and main strategy an investor has to follow at this point of time.
Any specific advice to the investors at this point of time?
Investor who wish to invest in direct equity has to follow a staggered investment style. If he wish to purchase, suppose if he wish to purchase 100 shares, don't buy 100 now. He can buy 50 now, and after sometimes or after some days, he can think of buying, adding more. So the staggered investment style is the best strategy for direct equity investor at this point of time. Number 2, mutual fund investor. Those who wish to do lump sum investment, it is better to avoid that. Instead, he can opt a systematic transfer plan, because he can park the money in the liquid fund of any schemes, and from there systematically he can transfer the funds periodically to equity funds, so that the fluctuations can be tackled. Regarding SIP investors, no doubt they have to continue their SIP investment, because this is an opportunity where they could mobilize maximum number of units, especially when market is falling. Okay, so the price averaging or the cost averaging will beautifully work during this type of market. Those who are conservative in nature, they have many options. They can go for conservative hybrid fund or corporate bond fund. If he select corporate bond fund, the paper should be having good quality, that he has to keep in mind. Another option is selecting G6 funds, or even state development loan funds are also there available in the market. So conservative investor have to choose this way.
Okay, thank you very much, sir. Thank you very much.